Thank you very much. Yeah, my name is Ralf Kubli. I am with the Casper Association and with Nucleus Finance. And I'm here to talk about a disaster that is in the making, and I would like all of us to avoid this disaster. So I'm here with a word of caution and a word of hope. So the future of finance is tokenized financial contracts. And what do we mean by tokenized financial contracts? Well, we talk about on-balance sheet instruments, bonds, annuities, commodities, yes, even shares, even though I think it's the least exciting asset class to be on-chain. Off-balance sheet instruments, swaps, futures, CDOs, if they still exist, and and credit enhancement instruments. What are those? Collateral, guarantees, repo, and margin. That's the universe of financial instruments. But we're headed for disaster. And why is that? Because the state of tokenization is terrible. Terrible. Why is it terrible? The market leaders in this space, they issue bond tokens. That's great. So they take a PDF of the term sheet and put it in the token. It's hashed. It's an amazing thing. However, it's a fairly dumb token. Doesn't do a lot. And the innovation is zero. You have that already today in your systems. You don't need a new rail. Even worse, some tokenization platforms, they provide somehow a description of the asset side. But where is the liability? And in the finance class, in the finance class, I was an asset without a liability side. A financial instrument without an asset and a liability side is simply not a financial instrument. So we're in trouble. So then people turn to DeFi, although I do note there's very few people here with like only shirts and sneakers and so on. So there's not many of us, not many here that have anything to do with DeFi. You guys are all a serious bunch. But DeFi will not solve the problem. Okay, but why? What is DeFi today? Maybe we have like 1 minute or 30 seconds. I ask the audience, what instruments do you see? What financial instruments do you see in DeFi environments? Just shout out. What do you see? What financial instrument? Not payments. I don't care about payments. Not CBDCs, that's payment. What financial instrument do you see in DeFi? I would say there's only one. So, any guesses? Cash? Yeah, but I would like to have a financial instrument, right? So, cash is like a subset. It's a very simple financial instrument, right? So, lending? Yeah, but what kind of lending? Okay, repo, yes, but not in DeFi environments. Collateral. Exactly. And how is the collateral secured? With more collateral. So it's over-collateralized lending. I ask you, how much over-collateralized lending do you see in capital markets today? Zero. Irrelevant. It's irrelevant. It doesn't solve your problem. So how do we solve the problem? What do we propose? You have to put the cash flow in the tokens. You have to put a cash flow in the tokens. So we suggest that we start with real finance, a machine-readable and machine-executable definition of the cash flow obligations of the parties. A native digital term sheet, which is machine-readable, machine-executable, and machine-auditable. And what do we do with blockchain? We bring the unique features of blockchain to this instrument, right? And what are the unique features of blockchain? We can observe, we can verify, and as a condition of the first two, we can enforce this contract, which gets us to a smart financial contract, a truly smart financial contract that allows innovation in trading, securitization, portfolio management, analysis of value, price discovery. That is the future of capital markets. And we have tested it, and we have proven it with a $5 billion asset book with asset-backed loans, where we represent both the asset side, the liability side, and an ownership ledger on-chain. And because we like tokenization so much, we also represent the collateral on-chain in the form of an NFT. And the beautiful thing about this is a near real-time balance sheet. So just block time delay. So I know what is happening off-chain, and I represent this on-chain, and this is basically a real-time balance sheet. So how does the future of finance really look like? The future of finance will look like that there will be a regulated institution, there will be issuers that have wallets on these regulated financial institutions that contain instruments that were issued in the manner I just described. And then you will go and ask, capital providers and ask them, I really would like to refinance some parts of my balance sheet. I'd like to sell you a few of my assets. And the capital provider will say, okay, I can see what you have, and I really like, the term loans that you've issued to the Mittelstand in Bavaria because they always pay. I like some of the leasing contracts that you have with, shipbuilders in northern Germany. And because I'm Swiss, there are some structured products called Strucki, that secure and offset some of the risks. So please send me product A, product C. I really like those cash flow streams. I like a few of your term loans. I need to secure, and hedge some of this as well. And you're done with your securitization. No more lawyers, no more structuring agents, because everything is contained in these financial contracts. Okay. And the beautiful thing is, we solve for some of the most difficult problems that you face today. You're going to call the regulator and say, listen, I'm not going to send you 60-day-old balance sheets in my reports anymore. And I don't pay any of the expensive consultants that you tell me to have in my bank to analyze my balance sheets to say whether I meet the regulations. I'm just going to give you an API that defines and tells you what kind of inventory I have on my balance sheet, how that inventory is in its current state, and how the future cash flows look like of that inventory. And then you can do your own risk management and simulations. So we solve for reconciliation, systemic risk, and regulation. And what is really the problem that we're trying to solve? Everything we're doing here, all the discussion we have today is we're trying to solve the problems that you all have. We have 50-year-old infrastructure. You have Excel out of everywhere. And you have tons of data, but no logic. All of you operate millions and millions of dollars and euro worth of data warehouses, which haven't really gotten you much more information. Okay? You're solving the problem of brute force reconciliation with these smart financial contracts. And I urge you not to repeat the mistakes of the last 40 years. And I'm telling you that without smart financial contracts, you have no chance of ever reaping mid-office and back-office efficiencies, which is why we are all here and discussing tokenization. So I'm summarizing. Algorithmic representations of the cash flows according to an open source financial standard, algorithmic standard called Actus, is a precondition for success. It will give you near real-time balance sheets, a granular understanding of your asset base, and they are machine readable and machine auditable, and it will give you the innovation that you're all looking for in terms of price discovery, securitization, management, trading innovation. And if you have no cash flows in the token in a standardized way, no one will ever adopt the infrastructure that you're currently spending millions on building. But there's hope. I told you there's hope. So VM-Daten is part of the solution. You can get that kind of information in that standardized way from VM-Daten. You should build whatever you build on the standard Actus, and we have the service and the engines ready for you in Nucleus Finance.